Crypto investors amuse me, and I will tell you why. Let's actually have a look at the Bitcoin graph for the last year. Remember a year ago exactly? Yes, Bitcoin was at 19,417, December 14th, 2020. Right now we are at 46,994. That is an increase of like 200 and maybe 20x, 2.2x or 220% increase. So some people can't differ between like percentage points and actual like multipliers, and that's just lack of basic mathematics, which means you didn't pass second grade or something. I don't actually know when you learned basic like percentages. I think it was like maybe second to fourth grade, somewhere in there. I don't know the education system these days. It sucks, especially math education in the United States. So I'm not really sure. Maybe they just stopped teaching that altogether. Either way, remember when it was at 19.4K in December of 2020? People were like, oh man, it's so good. I wonder how high it's going to rise. And remember when it actually went up to 63K by April 13th? People were kicking themselves. They're like, yeah, I kick myself. They were kicking themselves, and they were like, oh man, I wish it would. I could buy it at a cheaper price. And remember back in July, when it was at $29,000, which, let me remind you, is still $10,000 greater than where it was 1 year ago. People were like, oh man, this Bitcoin's garbage. It's a scam. Despite it being up still 50% from where it was just 7 months ago. And remember, just 3 months ago, you were hoping that it would dump so you could actually buy at a lower price. But now down here, instead of buying at that lower price, you're cursing Bitcoin because it's too low. I mean, seriously, make up your damn mind. Do you want to buy at a lower price, or do you want to buy at an even higher price? I mean, is a 50% increase in price good, or is it bad in just 7 months? And it's the same thing right now, almost, right? Like when we were at 63,000, everyone was 66,000. People were super bullish. 100K, Bitcoin is amazing. But now since we're at 46,000, oh man, it's utter garbage and it's like desolation. But remember, 47,000 is still a lot greater than 30,000 during the last dip. And it's over 2x up from where we are at the beginning of the year. So in my book, more than doubling your money over a year, and that's just for Bitcoin. If you were in any other crypto, you probably way more than doubled your money. Doubling your money over the course of a year is a pretty good return. I mean, compare that to the average market. You get like 7-10% a year in an index fund. That's like 10 times or 20 times what you would actually gain in those kind of funds. And plus, remember, up here at 66,000, you were saying, man, I wish I could have bought more at a lower price. Well, here we are now at a lower price. So instead of complaining, why don't you shut the hell up and just buy more coins like you said you were? And don't do this and the thing is, like, you guys people who are crypto investors like to think of themselves as investors and not gamblers. They even insist on it a lot of the time, and yet they still play margins and leverage. You know that technical analysis is often wrong in cryptocurrency because of certain things, like Elon Musk and other things. Things can change at any time in cryptocurrency. And unless you fail basic math again, which would make you stupid in the first place, well, unless you just had a really, really bad teacher. But if you weren't like from one of those poor communities and you just failed math, like basic math, like arithmetic and percentages, you're probably not very bright in the first place. If you're from like a richer community and you failed that because you had all the resources to actually learn that. So unless you did that, you're just not applying your knowledge. See, leverage trading, if you're leveraging 30x, that means your collateral can get liquidated if it moves 1/30th the other way. See, you don't really think of that. See, how can you only go into investing thinking about how much you can gain and not how easily you can lose stuff? That's the only way someone would be stupid enough to play that much leverage on a volatile asset. You might think that, oh, they're doing 400 or 500x in leverage, but think about how much major currencies change every day between the rates of major currencies change every day between the major countries. Not very much. Crypto is something that can dip 30-40% in a day. So if you're leveraging that much, you are just asking to get wrecked. And you're also asking for a heart attack. In fact, leveraging is essentially the only way you could have actually lost money this year. Same thing with margin trading. Anything that's inherently leveraged, you could have lost money. But if you just bought any coin or like any of the major coins and just held for 12 months, there is no way you could have actually lost money. Like you'd be up at least 200%. Even if you invested here in January on this little hump, you still would be way up right now, at least $6,000 from there. The thing is, like, if you're margin trading, you could invest here, but as soon as it dipped back down to 30,000, you would immediately get liquidated on like a 30 or 40x leverage. So you're basically just buying yourself a heart attack. And the thing is, like, there's so many chances you could have gotten immediately liquidated within the last 12 months. Whereas if you just did spot trading, there's no chance of getting liquidated as long as you weren't investing more than you could actually afford, which, by the way, is also really stupid. You would have no reason to actually be hyperventilating and selling at any time, because regardless of what happened in the last 12 months, you'd be way, way up. And I don't think we will actually fall to 20,000 again. So I don't think you have a problem. However, if you're leverage trading like 50x, if we fall even $1,000, you're screwed. So you can't really predict those movements, even with the best chart analysis. Did you know that they actually, even in the more stable stock market where TA is actually a lot better, did you know that they once did an experiment where they had the top 5 financial analysts in the world, basically at that time, versus a guy randomly throwing darts? Yes, the financial analysts did win but only by a little bit. So they were right like 60% of the time. You know what that means? The guy throwing darts was better than them 40% of the time. And 95% of financial advisors cannot beat the market over the long term, probably even more than 95%. So that should tell you something. Investing over the long term means picking a good crypto and holding onto it for at least a year or two, and not leveraging or margin trading, because that can easily get you liquidated and lose all your money. If you do spot trading, there is no way you would actually be down right now, and there is no way you would have actually lost all your money had you invested like about a year ago. But see, despite having all this knowledge right in front of them, people still hope for some kind of like miracles about some great reset, which the same people keep on repeating will happen every year, and yet never happens. And somehow people keep like falling for that. That's just why people are, especially crypto investors, are really dumb. But for those of you smart crypto investors who don't run into these problems, see, you might think that those dumb crypto investors make the crypto market look bad and will bring the wrath of the regulators onto the market, and you might hate them. But as a wise one-lettered mister once told me, people like that are fools. You should not hate them, but you should pity them. So I hereby pity those fools. Thank you, and have a nice day.